Good afternoon, students. Welcome back to this discussion on audit. So today we'll start with this another sort of component of the financial statements. So far, we have been discussing about the balance sheet and various items of the balance sheet. So today we'll start with the items of the P&L. In fact, in the previous session also, we touched upon P&L in terms of sales, wherein we just looked at the background of sales. That how important is that sales item? Okay, in terms of its significance, it is considered to be a significant risk area, which is presumed. It is considered to be a fraud risk area, which is presumed. Yeah, so that's the discussion we have had in the previous session. Now what we will do is we will pick up some small examples first of all. Okay, and I'll just pick up these examples from your study material only. We'll try to look at some of those aspects. Okay, and we'll just try to get detailed understanding of the sales first of all, in terms of how this is required to be reviewed. Further, we'll also try to design the audit procedures, the same thing that we have been doing for various other items. Now, when we talk about sales or the revenue, so again, it may vary from company to company. Some of the companies may be involved in sale of goods. Some of the company may be involved in services, wherein there's a sale of services. Yeah. And some of the companies may be into both these things, sale of goods and services. Yeah. So both the things could be there. Now, it doesn't really matter as to whether the company is into goods or services, or goods or services, because in all of these cases, the sales being an important area, all of those audit procedures around the sales will largely be moving in the similar sort of directions. But the point is that sales are not necessarily be of goods or the services. Yeah. So that means first and foremost requirement when it comes to the sales will be to understand the nature of contracts, will be to understand the nature of business company or the entity is having, because accordingly auditor will have to design the audit procedures. Yes or no? Yeah. All right. So now moving on to sales, as we discussed that it could be in relation to the products or services or both. Yeah. Now, in relation to sales, I think if you go back to our discussion on trade receivables, we talked about it, that there is a cycle. Okay, in relation to trade receivables, we discussed that there's a cycle to which trade receivables are linked, and that is in respect of sales. Because once the sale is done, that is when you get the trade receivable or the debtor. Correct? Now, there again, the sale could be of anything, but the trade receivables are generated through that. So that means when it comes to the sales, now sales is just one leg of the accounting. The other leg is trade receivables. Now, we have already covered the other leg. So that's why some bit of understanding on these sales, on these type of transactions, these type of agreements, we have already looked at. But now our focus will be more from the P&L side and not from the balance sheet side, or you can say not from the asset side. Yeah. Now, types of services or products the entity provides. Demand for the services or the products. Major selling product or services. Introduction of new products or service lines. Discontinuance of products or services. Major customers, sales terms. All of these are what? All of these, you can say, are the terms which are associated in relation to sales. Yes or no? Yeah? Yes or no? Because when it comes to sales, so this entire process becomes important. So this entire process will have to be looked at by the auditor. Until the time the entire process is not understood, this entire process is not reviewed, this will not help much in relation to the audit procedures. Correct? Yeah. So that's why this aspect in relation to understanding of the sales process becomes very, very important on the part of the auditor. Yeah. Now, when it comes to the process, once the process is understood, another thing which gets linked to the process happens to be the risks which are attached to that process. So, in every activity, in every transaction, in every event, there are some risks, okay, which the management needs to evaluate, which the management needs to identify, and the management also needs to come up with a mitigating plan in respect of those risks. Yes or no? Yeah. So the management also needs to think about the mitigating plan in respect of those risks. So those things become important. And what do you call it as that mitigating plan? That will be termed as internal controls, or you can say the management controls. Yeah. So now, once again, if you talk about some of these risks, processes, controls, these are not new concepts. I'm sure you understand that. I'm sure you have gone through this. Some of these areas you already understand, you may have already looked at. Okay. But in relation to this sales process, all of these areas become all the more important. And what is the reason for that? The reason is very simple, that because the sales is a significant risk area. So that's why a lot of focus, a lot of effort on the part of the auditor will be required in respect of this area. Correct? Now, whether the segregation of duties exist in relation to activities related to sales. Okay, so this again is important. Yeah. Who checks the credit limit? This is nothing but a part of this entire process. Who authorizes sales orders? Who raises sales invoices? When and how goods are delivered or dispatched or services are provided? Who collects and records the amounts received from debtors? Who ensures that the risks and rewards are transferred to the customer? How the sales have been recognized in the system. Okay, so now these are again some of the things you can say are related to management control, or you can say these are some of the examples of controls in relation to various risks which could be there in relation to the sales process or the activities related to sales. Yeah. Now, I can see some queries coming up. Okay, so I think these are for Afas to look at. I'm sure Afas must be looking at it. Your queries in terms of joining the session, no worries. Okay, yeah. Now, as a next step, once these risks are identified, once the management controls are looked at, or you can say understood. Looked at means understood. What is the next thing auditor will do? Auditor will also have to check that if there are some controls, whether those controls actually exist or not. Yes or no? Yeah. So auditor will have to look at it, whether the controls are actually existing or not. Further, if the controls exist, are they operating in an effective manner or not? Are they operating in an effective manner or not? Okay. So both the things are required to be looked at. Both the things become important on the part of the auditor. And therefore, as a next step, what is it that the auditor needs to get into? Testing of controls. Which controls? Controls which are set up by the management. Okay. Now, all of these controls will have to be reviewed, will have to be examined, will have to be checked. Now, let's consider the outcome of these two. Once the controls are examined, if let's suppose testing is done, okay, so two outcomes are possible. One, those controls may be operating in an effective manner, or they are not operating in an effective manner. Yes or no? Yeah. So these are the only two outcomes which are possible. Either they are operating in an effective manner or they are not operating in an effective manner. Correct? Now, if they are operating in an effective manner, so what will happen? Comfort of the auditor will increase. Yes or no? Comfort level of the auditor will increase. Yeah. Why? Because if let's suppose the processes are there, systems are strong, controls are there, and controls are also operating in an effective manner, then the chances of errors, or you can say the chances of misstatements, go down significantly. Yeah. So that's why auditor will have more comfort. And as a result of this, the substantive testing on the part of the auditor will comparatively be reduced. Comparatively, because when the controls are not there, or let's suppose controls are not operating in an effective manner, then what will happen? Then what will happen? Automatically, auditor will have to check a lot of things. He will have to increase the extent of testing. Yeah. He will have to significantly work on all of these testing procedures. Yeah. Which is not easy on the part of the auditor. Yeah. So that's why, first of all, auditor will have to get into these situations. Okay. Accordingly, he'll have to decide what is going to be the next course of action. Means whether the controls are strong, operating in an effective manner. If yes, then of course get on to the comfort level wherein his substantive testing will be reduced. Otherwise, he will have to increase the extent. Okay. Now, once again, if you ask me, sir, how will that increase? What will be the extent? Okay. To what extent this will have to be increased? See, all of these questions are difficult to be answered. Now, they will again be dependent on the situation of the company or the entity. So that varies from entity to entity. So that's how it's required to be looked at. Okay. Next, common internal controls over sales cycle include pre-numbered sales invoices, proper authority for approvals of orders, execution of sales orders. Yeah. Customer purchase order authorization over a certain limit, and authorization over receivables write-off. Yeah. So these are again, you can say, some of the examples in relation to controls. Okay. Or you can say the situation which will bring the auditor in a comparatively comfortable zone. Yeah. Now, moving on to the next step. Now, the next step is all about getting onto the substantive testing, because if the controls are tested, then the next step will be the substantive testing. Now, whether the substantive testing in terms of its extent will be high or low, so that's a separate matter, but substantive testing will have to be performed. Now, for those substantive testing procedures, For all of those areas, there are various aspects which are required to be looked at. So now what we will do is we will now get down to the substantive audit procedures. Okay. And before we really get on to this study material, so what we will do is we'll just try to look at some of those aspects in relation to sales, which will be performed by the auditor. Okay. So now, in relation to sales, because this is a P&L item, so a very important procedure will obviously be about the analytical procedures. Okay, so this will definitely be an important procedure. Yeah, analytical procedure. Now, as regards the analytical procedures, let's try to understand as to what needs to be done, how that needs to be done. Now, one will be the variance analysis. So let's suppose in the current year, sales is say 1200 crore. Okay, let's suppose rupees are in crores. Yeah, so let's suppose in the current year, say 24-25, sale was 1200 crore. Yeah, and let's suppose previous year, let's suppose sale was 1100 crore. Okay, now what is the change? 100 crore means sale has increased by 100 crore. And if we look at this increase in percentage terms, so we can say that the sale has increased by 9%. Okay, so the sale has increased by 9%. Yeah, so one is the variance and second is the percentage variance. Now, how does this variance analysis help the auditor? See, one, it will give a trend that how the sale has behaved, whether it has increased or decreased during the year. Further, auditor needs to analyze the industry. Means in the industry, what is the progress growth? Okay, whether the companies have been progressing, whether the industry is also is can see a similar sort of trend. If the trend in the industry is similar, then of course one can say this is very much in line. But let's suppose if in the industry all of the companies have been growing, let's suppose at 30 to 40%, this company is growing at 9%. Or let's suppose if the companies are facing a challenge, okay, sales are going down, but this particular company has shown a progress. So these are some of the things auditor will have to get into. Auditor will have to assess as to why this has been happening. Correct? Now, as regards this variance analysis, this needs to be then further broken down. So let's understand. As to how this will be then further broken down. See, if we look at the amount in terms of the total turnover which is there during the year and how that has increased as compared to the previous year. So this we can say is a broad analysis. Okay. Or you can say a very, very high level analysis, which doesn't really give you a detailed assessment. So that's why what should the auditor do? Auditor should break down the sales into quantity and rate. And similarly, this one into quantity and rate. Yeah. So now, why is this important? Why is this required to be broken down into quantity and rate? Because this will again give a further understanding to the auditor. So let's understand as to how the further understanding will be provided and how will this assist the auditor. Now, if let's suppose quantity in the current year and in the previous year, let's suppose that has remained same. Okay, so it was X in the previous year, in the current year also, it's largely same. So what does it mean? That rates have gone up. Yeah, which can be substantiated by the auditor. How can that be done? Auditor can go look at the sales invoices, sales agreements to find out whether the rates have increased during the year, or is it because of the increase in rates during the year only? Yeah, because the quantity has been constant as compared to the previous year. Yeah, so this level of assessment can be done once this amount is broken into quantity and rate. Okay, otherwise, one more type of situation is possible, that if you look at the rates, it may have happened that rates in both the years are same, means company has not changed the sales prices. So there is quite there's significant pressure in the market, very difficult for the company to increase the rates. Yeah, so very difficult for the company to increase the sales prices. Yeah, so that sort of challenging situation is going on in the market. So that's why what the company has done is, company has kept the rate same. And this increase of 9%, where do you get to see this? Volume has gone up. Yeah, so during the year volume has gone up. Okay, yeah. Now that again is important. Why? Because that will give the auditor an understanding as to how the business has been behaving, how the business has been going on. Okay, yeah. Or another situation is possible. Let's try to understand that. It may have happened that if you look at the amount, if you look at the amount, in terms of amount, it appears as if the sale has increased by 9%. But actually, if you look at the rate, what do you find? That during the year, means during the current year, rates have gone up by 20%. Means company has increased the prices. Okay, company has increased the prices. But if you look at the quantity, what do you find? That quantity or the volume of sale has actually gone down. Okay, this may have actually gone down. Okay, yeah. So in this case, what do you find? In this case, you find that if you look at the volume in terms of sale, actually it's been going down. Okay, this is not improving, this is actually going down. But still, this sort of increase which you get to see in the sales, why is that so? That is because of the increase in prices during the year. Okay, now again, that could be strategic, or that may not be that may not be a very healthy sign for the entity. Now again, it may vary from company to company. Correct? Clear on this? Yeah. Everyone clear? Any questions so far? Any questions so far? I understand much of the students have not been able to join over here because of this technical glitch, whatever is that. But I understand Rihanna, Sunil, you are there. So if there is any question, any doubt, you may just let me know. Any questions? No? All right. So now, So this, of course, is about the analytical procedures, you can say. Okay. And to a certain extent, you can also say this is some bit around the substantive analytical procedures. And which are, again, please remember, not new. Yes or no? Analytical procedures you have already covered. Testing of controls you have already covered. Correct? So we can say two sets of procedures we have discussed. Test of controls, analytical procedures. Again, analytical procedures could be various. Another type of analytical procedure could be a month-on-month analysis. Okay, month-on-month analysis. Now, what do you mean by that? During the 12 months in 24-25, during the 12 months in 24-25, you can see the trend as to whether the sale has been increasing or decreasing. And this month-on-month comparison can be done for the current year as well as for last year. Okay. Now, once again, as to why these things are required, because this will give the auditor more clarity. Yeah. So this will give the auditor more clarity, more understanding in terms of how the sales has been behaving, how the sale has been going on. Clear? Clear on this? Yeah. Okay. Now, next, when it comes to sales, now for sales, because generally the volume of sales may be too high, or you can say the transactions of sales for most of the companies you will see to be significantly higher. So that's why in such a case, what should you do? That's why in such a case, what should you do? That's why in such a case, of course, other than these analytical, other than control testing, some sort of testing of detail will also be performed. Yeah. So what do you mean by testing of details? Sales register will be obtained. Yeah. This sales register will be traced to the books of accounts, first of all. Why? Because the amount of sales which is there in the sales register, that should match with the books of accounts to begin with. Yes or no? Yeah. Now, after that, once this is done, once this is matched with the books of accounts, what should the auditor do? The next step that the auditor needs to do will, of course, be to reconcile that. Yeah. So a reconciliation procedure could also arise. Now, what is going to be the reconciliation procedure? Now, the reconciliation procedure could be the reconciliation of sales as per books with the sales as per GST records. Correct? Yeah. So, in a way, the sale which is getting recorded in the books and the sale which is getting reported to the regulators, that should also reconcile. Yeah. So, this, anyways, is a very, very important thing for the auditor to look at. And through this, auditor can just try to ensure the completeness of sales. Yeah, because he is just trying to make sure that the sales data is completed. Yeah. So something which is going to a third party, let's suppose that is reported to be 100. So the same number should be there in the books. Yeah. Or if let's suppose the number reported to a third party says 100, but in the books it's appearing to be 90 or say 105. So what are the reasons for that? So a reconciliation for that needs to be performed. That becomes important on the part of the auditor. Correct? Yeah. Okay. Now, reconciliation, again, we discussed that this reconciliation with the GST records. This becomes another important procedure. Next, Once the sales register is obtained, the other procedure would be in respect of sample testing. Yes or no? If the sales have been made during the year, then of course sample testing will be required to be done. Correct? Yeah. The sample testing will be required. Now, this sample testing, once again, needs to be picked up on the basis of materiality, various criteria of sampling. Okay. So now that sampling technique, which anyways is required to be considered for various items, will also have to be considered for this item. Okay. And using that, the sample will have to be selected and basis which the testing will have to be performed. Okay. Yeah. All right. So now, so as around the sample testing, once again, it's about checking off invoices, sales orders, okay, agreements. Yeah. So all of those underlying records which will be there. Okay, there could be e-way bill, there could be various supporting bilty, etc. documents which are attached with the invoices. All of those documents. Okay, so we can say and various other supporting documents are required to be reviewed by the auditor. Yeah, so that's how the auditor will examine this. Correct? Next. Next is around the cutoff. Okay, so now cutoff, once again, we have discussed. See, because sales is a fraud risk area, significant risk area. So generally there is a tendency. What is the tendency? That the management may want to manipulate the sales numbers. Okay, let's suppose 2024-25 is the reporting year. Okay, so this is the reporting year. So in this case, if let's suppose turnover during the year was, let's suppose 250 crore. Okay, but the management wants to show higher sales. So what will the management try to do? Sales during the beginning of next year. Okay, sales which are taking place, let's suppose in first week of next year, in first 15 days of next year. Okay, depending on again the target which the management has for the reporting year. Management may just try to move the sales from the year 25-26 to 24-25. Okay, so the management may want to move this. They may try to do this. All right. Now, in this case, what should you do? Cut off? Yes or no? In this case, what is going to be the audit procedure to take care of this risk? Cut off? Correct? Yeah. So that's the procedure which the auditor will have to perform. That will be in relation to the cutoff. Yeah. Because that's how the auditor will try to mitigate this risk. Okay. So to take care of this, cutoff will have to be performed. Now, as around the cutoff, I think you understand about cutoff But please remember that cutoff is not only about last 5 invoices or first 5 invoices. Okay, so this perspective now needs to be improved. So let's try to get into this as to what needs to be done here. See, to begin with, auditor will generally look at last 5 invoices of the current year, first 5 invoices of the next year. Okay, so that will generally be done. There's no doubt about it. Yeah, so that will generally be done by the auditor. But in this case, if let's suppose auditor finds there is some problem, say in any of these samples. So these are the two samples we have considered. Yeah, so this is the first one. You can say this is the last one or the second one. Then does it mean that auditor will just stop here? No. In that case, auditor will increase the horizon. Okay. So how will the horizon be increased? So to begin with, what the auditor may do is auditor may pick up or may want to check, again depending on the volume of sales which is there, and generally the volume of sales towards the end, towards the closure of the financial year is higher generally. Yeah, because any business will want to show more sales during the year, so generally volume of sales is higher towards the end of the year. So in that case, what will the auditor do? Auditor will increase that, increase the testing, increase the extent. So maybe instead of last 5, if let's suppose during the year 100 invoices are raised, so auditor may pick up all the invoices of last year, last day, and may just check that. You may be thinking, sir, 100. Yes, if let's suppose there are some problems, he may want to check that. Again, this will have to be decided by the auditor. Okay, he will have to just assess as to what is practical and to what extent it's required to be done. And it's not necessary that all the supporting documents will have to be looked at. Auditor may just go and look at the uh, look at the software, because many times within the software invoice details are also captured. So thereby auditor can just cut down on the time for the testing of this. Yeah. Or if let's suppose the volume of sales, let's suppose is not 100 invoices in a day, let's suppose it's 10 or 20. So auditor may want to check last 5 days, first 5 days. So again, it may vary from company to company depending on the situation as to how this extent will be increased by the auditor, and that will again be dependent on the problems or the observations that the auditor will face. Clear? Clear on this? Yeah. All right. Any questions, any doubts? If you have, as around some of the points that we have discussed, please let me know. Yeah, everyone clear? All right, so now what we will do is we will get down to those procedures in the study material. We'll just try to understand as to how these procedures are required to be put down. Okay. Okay, so Prem is asking, so how will the auditor find the quantity and the rates of sales? See, rates of sales can be verified from the sales agreements, from the sales invoices. On the invoice, rate will be mentioned. Yeah, so if you go look at the sale amount, sale register. So if there is something in the sale register, so how do you check that? You'll check the invoice. On the invoice, rate will be given. Further, something which is there on the invoice, how do you check? You will check with the agreement with the party. There may be a purchase order from that party or sales order from the entity which has been getting and which is the auditee. Okay. Yeah. So this will become the supporting document for the rate. Now, as regards the quantity, see, for the quantity, auditor will have to get on to the quantitative records. Okay. Now, what do you mean by quantitative records? So you can say auditor can always ask a quantitative movement in respect of inventory during the year. So what would you call that movement as? Opening balance? Any additions during the year? Any additions will be through the production. So if the goods are manufactured, it will be through production. If these are not manufactured, then purchases. Any deletions, which will be through sales, and the closing balance. So this is what you call as movement. And this movement will be only for the quantity. So we are not talking about amount here, only the quantity. Where do you get to see this from? From the production records. Okay. Anyways, company must be maintaining such a record. Yes or no? Stores must be maintaining this record. Yeah. So from that record, quantity can be verified. And again, on a sample basis, when you purchase something, you can always check the quantity on the purchase invoice. On a sample basis, when you sell something, you can always check the quantity on the sales invoice. Okay. Yeah. So first of all, you will have to obtain the complete record, means the complete sort of movement in terms of quantity, which can then be checked through the invoices, through the production records, through the stores records. So this is how it can be verified. Yeah. Okay, Prem is asking, sir, what if there are different types of products? No worries. And different types of products will generally be there. Yes or no? So let's understand this. Okay, so now what you can do is you can obtain a movement. So let me just call it as quantitative details, okay, of inventory and sales. In this case, what will you have? Opening balance only in terms of quantity. Correct? Then production during the year or purchases. Okay. Then sales during the year. Correct? Sales during the year. And then you will have closing balance. Yeah. For all of these, you will have quantity. Now, if let's suppose there are different products, so you can always include the product wise data. So let's suppose this is product A. Yeah. This is B. This is C. This is D. This is E. This is F. Yeah. Then you can have a total for this. Okay. So this is how this data can be produced. Yeah. And any company must be maintaining this data, or this data should have been there with the company, because that's how they will be reconciling their records. Understood? Yeah. This can again be broken down on a month-wise basis. So if you want, you can have this data for full year. Currently, this is for full year. Now, if you want, you can always ask the company to provide this on a month-wise basis. Let's suppose this is for April 2024. Then you can ask for this May, June, July. This can always be available on a day-wise basis, which can then be taken in total terms. So that's how this data can be produced. Clear? And for all of these data, what will you do? For production, for purchases, for sales, you can always go and verify that on a sample basis, and which is anyways required to be done. Okay, clear? Clear? Prem, clear on this? All right, so now moving further. All right, so now moving further. So what we will do is we'll just flip through some of these procedures, okay, in respect of sales. So one, as regards the occurrence, ensure the revenue is not overstated. Check whether single sales invoice is recorded twice, or cancelled sale invoice could also be recorded. How do you check that? Again, on a sample basis. Test check few invoices with their records in the books. Okay, confirmations. I think that's the balance sheet component, but that's the second leg which is attached to sales in form of receivables. Okay, that anyways we have talked about. Okay, whether any fictitious customers or sales have been recorded. So again, when you go look at the underlying documents, through that you will be able to check, when you will be able to verify whether any shipments were done without the consent. So whenever you check something on a sample basis, so you'll also look at the approvals, you'll also look at the underlying agreement, yeah, whether the sales are in line with the purchase or sales order or not, are in line with the sales agreement, yeah, whether the rates of the sales invoices, means the sales rate, are matching with what has been agreed with the customer or not. Okay, yeah. All right, so whether customer obligations are contingent on other actions. Review the sequence of sales invoices, yeah. Review the journal entries for unusual transactions. So the sales register can always be scrutinized in terms of some high value sales, or in terms of some unusual sales which could be there in the company. Okay. Calculate the ratio of sales returns to sales. Means if during the year sale was, let's suppose, rupees 10 crore. Okay. But 20% sales have got returned. Okay. So you observe a trend that the company has been making significant sales, but on a net basis, its sales are only 8 crore. Why? Because a significant chunk has got returned. So the sales which have got returned, whether those have been accounted for in an appropriate manner or not. Okay. Number two, whether the sales which have got returned, whether that has been captured as inventory in the books of accounts or not. So sometimes sales return entry may have been passed, but the corresponding inventory has not been recognized. That should also be done. Yeah. And of course, that inventory should have been physically received by the company. Okay. Yes or no? Yeah. Next, check the sales returns with the sales invoices, challans, credit note, stock register. So this is all about checking the supporting documents in respect of sales returns. Yeah. All right. Then cut-off procedures we have already discussed. These are again very, very important procedures. Yeah, to ensure that the sales are taking place in the right period. Sales are not understated, not overstated. Okay. Then check whether the quantity appearing in the sales register is correct or not. Reconciliation. Okay, all of these reconciliations are the same thing that we just discussed. Reconciliation with the GST records. Okay, that again is a check because at two places you are just trying to check whether the number reported is correct or not. Trace a few transactions from inception to completion. Okay. Next, disclosure. Now, as around the sales, ensure whether the following disclosures, which are required by Schedule 3, whether those have been done or not. Now, in respect of a company other than a finance company, revenue from operation shall be disclosed separately in the notes. And what will be the presentation criteria? Sale of products, sale of services, grants or donations received, other operating revenue, okay, excise duty, if at all is there, that needs to be excluded, or if let's suppose there is any GST, so that needs to be excluded. If let's suppose the company is in the financial business, revenue should be broken down and presented in this form. So what is the form? Interest. So first is of course interest and other financial services and other financial services. Okay. Revenue under each of the above heads shall be disclosed separately by way of notes to accounts. Okay, whether that is brokerage and discount on sales other than usual trade discount, whether the transactions with the related party are disclosed in the notes to accounts or not. So these are more of the disclosures corresponding to the sales, or you can say the revenue transactions. Yeah. Now, other than sales, in relation to this overall head of income, or you can say the total income, some of the other components which get included can be like interest income, dividends, or any sort of sale or gain which could be there in relation to investments sold or the items of PPE sold. Yeah, so different types of incomes could be there, but we are not talking about the core business or the income generated from the core business. We are just talking about the, you can say, some sort of ancillary income by the company. Now, as around the audit, some of the procedures are required to be performed on these items as well. And in some of the cases, components of these types of income would be quite significant. Okay, so please understand that because these components could again be significant, so that's why they are required to be first of all evaluated in an appropriate manner by the auditor. Now, what do you mean by that? See, in terms of the materiality, first of all, auditor needs to assess that how material are these components. If these are material, then of course, all the procedures will have to be performed, depending on again whether these areas are significant risk area or not so significant risk area. If let's suppose these are not so significant, not material, there again to a certain extent substantive testing as well as analytical procedures will have to be performed, which for which the extent could be lesser, but the testing will definitely be required. Yeah, so the extent could be lesser, but the testing will definitely be required. Yes or no? Now, for recording the other income, if let's suppose if we talk about interest income, so what will you do? For verifying the interest income on fixed deposits, let's suppose company had fixed deposits. Okay, company has invested in fixed deposits, so interest income will be generated. So what will the auditor do? Obtain a listing of fixed deposits. Yeah, further, because these are fixed deposits, so that's why in a way these are also the bank balances. Yeah, so confirmation procedure will also be there, but that is more about the asset side. We are not talking about the asset side right now. We are more into the P&L side. So that's why from these fixed deposits, interest income will be generated. Yeah. So the calculation of that interest income, management must have prepared some workings. So those workings are required to be verified. Further, any working which is verified and which would have also been recorded in the books of accounts. So that amount which is recorded in the books of accounts on the basis of workings of the management also need to matched. Yeah, so that is also required to be matched with what the bank has shown, because the bank would have also done some calculation of the interest income. Yeah, so something which is there in the bank records should also match with what is there in the books of accounts. Okay, any sort of mismatch here again may require reasoning. Okay, so for which the management will have to have some answers. So auditor will perform inquiries from the management in respect of the same. Okay. Now, calculations we have just discussed. Yeah. Confirmations, I think we have discussed that quite a lot, but that is more about the asset side. So that's why we are not getting into that. Now, when it comes to the interest income, so generally banks provide one interest certificate wherein they are in a way validating the interest which the bank has computed and which has been accrued on the part of the company. So that interest certificate can also be reviewed by the auditor. Further, if there is any sort of income, that must also be appearing in the income tax records. So there are certain forms like 26 AS or AIS. Yeah, so in those records, a matching should also be done by the auditor. So something which is there in the books in the form of workings, auditor has checked that, and those workings can then be traced with the income tax records. Okay, form 26 AS, etc. Yeah. Then another type of income could be in the form of dividends. Yeah, could be in the form of dividends. Now, what do you mean by this? Now, dividend will of course be on the investments. Yes or no? So now, in respect of dividend, auditor will have to check whether that has been earned. And when do you record dividend income? Again, go and look at the criteria of accounting, which is nothing but the accounting standard. When the entity's right to such payment is established. Okay, it may or may not have been received, but the moment we say that the right to such payment, okay, means such receipt is established, that is when the dividend income can be recognized. So whether the company has done that or not, and whether all of those dividend incomes are reconciling, so the auditor can always obtain an investment register. okay, in respect of various investments which are made to ensure completeness. Okay, then the auditor can just check as to which all companies have declared dividend and whether those dividends are matching with the again income tax records, because all of these things will be appearing in the documents like 26 AS etc. Yeah, so all of those things can always be looked at over there. Yeah, clear. Next, if at all there is any sale of investments or mutual funds or any sort of other asset which has taken place, yeah, which has resulted in gain, because we are talking about the gain here, because it's an income. So the auditor will have to go check that. So how will the auditor verify that? One again will be the workings of the management. Those workings will again be traced to the books of accounts. And third will be to look at the corresponding documents. So if any such sale would have taken place, so some agreements may have been executed with the counterparty, sales invoices would have been raised. Yeah. So all of those become the supporting documents, or you can say the underlying documents, basis which these are then required to be checked. Clear? Yeah. Next, in respect of some of the investments, say for example from mutual fund etc., obtain the mutual fund statement, yeah, and trace the gain or loss as recorded in the books of accounts to the gain or loss as recorded in the mutual fund statement. Okay, so if there is any such gain or loss which has been realized, so the company would have recorded that. How do you go verify that? From the mutual fund statements. As an auditor, you'll that will become your supporting document to verify that. Yeah. And here again, in respect of these types of incomes, whether the presentation disclosures are as per schedule 3 or not. Okay. Which is about interest income, which is about interest income in case of a company other than finance company. Yeah. Dividend income needs to be shown separately. Net gain or loss on sale of investments, other non-operating income. Yeah. So all of these things become important. Clear? Yeah. So this is it that we had on other income, or you can say with this, what we have done is we have just uh, completed our discussion on the income side. Okay, so now before I really move further, if you have any questions, any doubts. Okay, so I think Prem had a query. I think we have discussed about quantity and rate. All right. Then I think other queries were in relation to the Zoom. Okay, that seemed it's. I'm just assuming that is sorted now. Yeah. All right. So, any more questions? Any more doubts? Over to you. Any more questions? Any more doubts if you have? Then we'll move on to the next item. No? All right. So now purchases. Okay. In fact, what we can do is before we really move on to this item, let's take a break. Huh? Yeah. So I think we can take a break now and then we can just start with this. Otherwise, what will happen is we'll just start with this and then we'll take a break. Okay. So let's take a break now. And after the break, we'll move on to this purchases. Fine. Okay. Afas, let's take a break. Huh? Okay, so now moving on to the next head, that is purchases. Okay, now when it comes to purchases, for purchases to a certain extent, we have had discussions. Okay, to a certain extent on purchases, some of the procedures we have discussed. Yeah. So now what we are going to do is we'll discuss some of the procedures in greater detail. Okay. Now, in respect of purchases, similar to sales. Okay. So if you want to draw the similarity, one of course will be the analytical procedure. So here again, analytical procedures will have to be performed. Now, in terms of analytical procedures, what do you do? Variance analysis means year on year as to how the purchases have changed, means whether those have increased or decreased, what has been the trend. Yeah. And similarly, you need to break it down into quantity and rate, because if you have to get some more clarity, so how do you get more clarity? When you break it down into quantity and rate, because that's how you'll get the clarity as to whether the volume is getting increased in terms of purchases, or maybe that the quantity has been constant, or may not be increasing significantly, or maybe decreasing, but the prices have gone up significantly higher. Yeah, which could be impacting the purchase cost. Yes or no? Yeah. Yes or no? Yeah. So all of these things therefore become important. Yeah. So these things become important. These are required to be looked at. Correct. Next, when it comes to analytical procedures, here again, for the purchases, a month on month analysis in terms of the trend, in terms of how the things have been moving on a month to month basis. Again, that can also be one of the variance analysis, or you can say one of the analytical procedures. Okay. Further, when the purchases are reviewed in an analytical manner, so there again, what needs to be done is it needs to be identified, it needs to be looked at as to how the purchases are behaving. Okay. And in terms of purchases, once again, if you look at the quantitative analysis. Okay. So now if you look at this quantitative analysis that we discussed, so this quantitative analysis will also help the auditor in terms of its verification related to the purchase quantity. Yes or no? Because the quantities which are getting purchased, so you get to verify that. Yeah, you get to verify that in terms of the quantity as to what is the quantity which is what quantity is getting purchased. And of course, all of these quantities can always be verified from the underlying documents, which could be the invoices, which could be the agreements, or various other supporting documents which are possible. Correct? Yeah. Okay. Moving further. Now, analytical procedures we have discussed. Okay. We have already talked about the analytical procedures. Next, for ensuring completeness of purchases, what do you do? Analytical procedures can also help the auditor a great deal in terms of ensuring the completeness, number one. Other than analytical procedures, auditor can also look at one more audit procedure, and that is about confirmations. Yeah, because through the confirmations, auditor will get the clarity in terms of what should be the amount of purchases which has been recorded by the other parties in terms of their sales, because something which is a purchase for the entity will be a sale for the counterparty. Yeah. So this sort of analysis again becomes important on the part of the auditor. Correct. Okay, now next is about the cutoff. So I think cutoff, once again we have discussed. So let's look at the cutoff for purchases. A cutoff is required to be reviewed. So what will be the cutoff testing procedure? Now I think instead of saying that these will only be first 5 or last 5, yeah, so what do you need to check? Of course, first 5 and last 5 we will check, but we may have to extend this. Okay, so this extent may have to be increased. May have to be increased. Yeah, so it may have to be increased. So this first 5 may have to be made first 10, or maybe the first 3 days, or maybe the first week. Again, very similar to what we have discussed in case of sales and earlier sessions also. Correct. Next, as regards the testing of details, for the testing of details, so if you obtain the purchase register, okay, which is then traced to the books of accounts. So this purchase register then needs to be matched with the books of accounts. And once this purchase register is reviewed, is scrutinized, so of course samples will have to be selected, or you can say sample testing needs to be performed. Okay, so this will require sample testing to be performed. Okay, yeah, so this sample testing will have to be performed. All right, yeah, so this sample testing will have to be performed. Now, in this case, we looked at various procedures, which is about testing of details, analytical, ensuring completeness, cutoff. Okay. Then, of course, control testing, understanding of processes in relation to purchases, again, is an important area. So, all of those procedures, as we discussed in case of sales, they are, you can say, in a way, are also the relevant procedures that you will have in case of purchases. Yeah, and once again, purchase is also considered to be a very important area. Now, let's look at the audit procedures in the study. Yes, so now if you look at the purchases, so what do you have? Ensure that purchases are not understated, not overstated. So this can of course be done with the help of cutoff procedure 1. Okay. Other than that, what do you do? Whether any fictitious vendors have been booked or purchases have been recorded by reviewing the vendor selection process. Yeah. Also performing procedures to ensure existence of vendors. Further, in respect of purchases, checking the underlying documents to ensure that goods have been physically received. It should not happen that only the invoices have been received but the goods are not received. Okay. Yeah. So whether the goods were received at the factory gate. So entry register can be verified, source registers can be verified, store records can be verified for the same. Okay. Generally, when the goods are received, okay, in some of the medium sized, or you can say large sized companies, there is also a procedure of quality inspection, which is just to ensure that the quality of goods is appropriate. Okay, quality is right. Yeah. So whether the quality inspection of goods was done, whether a goods receipt note was prepared, whether the purchase invoice was approved. Yeah, so all of these underlying documents which will be reviewed, whether that is about purchase invoice, uh, purchase agreement, or any supporting document. Yeah, in terms of recording that, whether that was approved as per the approval metrics of the entity or not. Okay. Special considerations during audit of purchases. Now, what are those special considerations in relation to purchases? Purchase invoice received should be the original copy and not photocopy or carbon copy. Number one. Purchase invoice should have been booked only once. Okay, so it shouldn't happen that purchase invoice is booked twice or thrice. So that sort of risk, okay, which can always be looked at by scrutinizing the purchase register. Okay, just by checking whether the invoice is duplicated or not. Yeah, so those Excel workings can always be verified. Okay. Purchase invoice should be in the name of the entity. So that also needs to be looked at. Okay. Then input tax component should have been booked. Now, in relation to purchases, another check which can be done is its reconciliation with the GST records. Okay. Now, purchases which have been recognized in the books, those should match with the amount which is appearing as per GST records, because in respect of purchases, all of these purchase details are uploaded on the GST portal. And input, okay, input means that GST input credit in respect of the purchases. Okay, that is also uploaded on the GST portal. So that sort of reconciliation should have been done by the auditor, again, to check. Now, this procedure can be done to ensure few points. One, whether the parties are matching as per the books as well as the GST records. Number two, whether the input credit has been availed appropriately or not, means nothing gets missed. It should happen that input credit has been taken in excess in the books as compared to the portal. Number three, the purchases which are there in the portal, and if the same amount is there in the books, so that will also ensure completeness. Yes or no? Yeah. Okay, so then I can see one query from Shreya. Shreya is asking, sir, what is FOB and CIF? I'll discuss these terms. Huh? Okay. Now, input tax component we have discussed. Okay, now next. If at all there are purchases from the related parties. Now, for a related party, we have discussed that the considerations are slightly higher. So now what are the considerations in respect of transactions with the related parties? One, that transactions with the related parties are taking place at arm's length or not. And this should have been appropriately approved. Yeah, so there should be some approval internally with the company. So approval will come from the board of directors. Yeah, so that's this approval should have been there in terms of executing these transactions, in terms of entry into such type of contract. So therefore, if there are any such transactions, then other than all the procedures for purchases that you will do, you will also ensure these additional procedures, which is more in respect of the related parties rather than purchases. Correct? Which is all about the objective of ensuring whether these are at arm's length or not. Okay. Then the auditor should review whether the purchases should be capitalized or expensed off. So this is more about the accounting. Yeah. So the journal entries needs to be reviewed, and you can say the journal needs to be scrutinized, which is more about scrutinizing the purchase register in terms of checking if there are any unusual transactions. Okay. Then I think purchase cutoff as one of the procedure we have already discussed. Correct. Next, analytical procedures. Okay, analytical procedures, I think, will be in relation to the variance, some of the consumption analysis, okay, as to how the stock has been moving in terms of quantity and rate. So in respect of purchases, this quantitative movement becomes all the more important. Yeah, because that is one of the records to check the quantity. Okay, in terms of what is there, what is received by the company. Okay, and various ratios can always be used. Further, as regards the purchases, the disclosure requirements, presentation requirements, whether those are in line with Schedule 3 or not. Okay, whether the purchases of stock in trade have been specifically disclosed, whether the changes in inventories of finished goods, stock in trade, work in progress have been specifically disclosed, whether the transactions with related parties are appropriately disclosed. Okay, so all of these things are important on the part of the auditor to review. Yeah, clear on this? Yeah. All right, any questions, any doubts so far? Any questions, any doubts? Okay, so Samohini is asking, sir, please explain arm's length price. See, arm's length price we have discussed earlier. Arm's length price means whether the transaction is taking place at fair value or not, or you can say market price or not. Okay, so that's how, maybe in a very simplistic manner, that's how you can understand. Okay, it should not take place at below market price. Say a company is selling product to every party at rupees 10 per unit, but to a related party at 12 per unit to inflate sales, or at rupees 8 per unit to provide a discount to that party. Okay, so this is what you call as arm's length price. Fine. Then I think Shreya asked about free. See, FOB is about free on board, and CIF is about its full form is cost insurance freight. See, these are some of the terms which are associated with sales. Okay, in case of sales, you need to understand. Now, this is more of an accounting requirement. Yeah. So in case of a sale, every time there is a contract, you need to find out that when will the risk and reward get transferred to the buyer. Okay. And in that context, some of these terms are used. Cost insurance freight would mean that these are inclusive of these things. Okay. So when you are selling something, it would mean that the arrangement includes cost, which is the cost of goods, insurance in terms of the insurance cost during the travel of the goods. Freight means freight which will be incurred. Okay, so both the parties agree as to who will bear this. Okay, so that's the terminology. But I believe other than these two terms, you always need to understand the entire arrangement, and that's how you need to assess as to when the risk and reward will get transferred, and accordingly take the final call as to how the sale should be recognized. Okay, then I think this query comes from Priyanshi. She's asking, sir, after covering this chapter from module, it is clear that we have to learn assertions and to apply them in every particular account on their basis and perform audit procedures to confirm or to assure the assertion. So I won't say you need to learn this. I would say you only need to apply this practically. So that should be your endeavor, that you get onto a stage wherein you are able to apply the assertion, or you can just think through that if, let's suppose, there is a given assertion, what is it that you'll do as an auditor in relation to that assertion? Or if, let's suppose, we talk about it other way around, if, let's suppose, a situation and a procedure is given, so you need to think about it, that what is the assertion which is getting covered through this. So that should be your objective. Okay, or you can say the outcome should be this in terms of your clarity, that this is where you need to reach. Okay, yeah, clear on this? All right, so now next is about the employee cost. I think Priyanshi is clear. Very good. Okay, so now employee cost. Now for employee cost, it's an important area. Yeah, because generally you will find this component, and generally this component is a significant cost in most of the companies. Huh? So that's why, again, this is considered important. Now, when we talk about P&L, so see, variance, or you can say analytical procedures, will become relevant for all the P&L items. Okay, so that's how you need to consider this. They become relevant, important for all the P&L items, including the employee cost. So now, for employee cost, let's think about some of the procedures or some of the things that you may want to apply, that you may want to consider. One, how is this changing year on year? Variance analysis. Okay, wherein, let's suppose, if you have 100 in the current year as the cost, which was, let's suppose, 98 previous year, so 2 has increased. So now what is the percentage increase? Okay, and it can always be a percentage decrease. Okay, yeah, so this is one. Next, as we have discussed in case of sales as well as in purchases, so here again, what should you do? This cost should again be broken down into two components: quantity and rate. Now, what would mean quantity and rate in the context of employee cost? It will be the head count, means the number of employees, and the average salary per employee. Yes or no? Average salary per employee. Correct. Yeah. So now, in this case, if, let's suppose, if you get down to this assessment, so what will happen? Here again, as an auditor, what will happen? You will have more clarity in terms of this cost, means during the year, what has been the change? Is the cost increasing because of the increase in number of employees? And vice versa, means it's decreasing. Or maybe the salaries have increased due to the increment, or maybe some of the new joinees which are there at a higher cost, at a lower cost, which may have resulted in some sort of decline in the average salary. Yeah. Or is it a mixture of these two? Or is it that number of employees is going up but average salary has gone down, or number of employees has gone down but average salary has gone up? Yeah, so either of these things could be there. But for all of them, you will get a clarity. Yeah. So this therefore becomes a very important analytical procedure. Further, another area which gets linked to this is the PF component. Now for PF, we discussed that PF will be a liability, but PF will also be a cost. Yeah. So some portion of this salary should always be PF. Now, what percentage should PF be of the salary? If let's suppose we say 12%. So total salary into 12%, we can check whether PF is 12 or not. Okay. Or you can say in this total salary, what is the basic portion? To that basic portion, you can always apply the percentage and then check whether that is the PF cost during the year or not. If there are any variations, you can always check that. So in this case, as an auditor, what did you do? You built the expectation, okay, or you created an expected number, and then you compare that with the actual number, and that is how you will get to check. Okay. Further, next, another procedure. What will you do? Sample testing. Sample testing of additions. Additions means new joinees. Yes or no? Sample testing of deletions. Deletions means employees who have left. Employees who have left during the year. Yeah. So that sample testing you'll do. For additions you'll do, for deletions you'll do. Correct. Okay. Further, for the employees, you will also perform a procedure whether the headcount is correct or not. Okay. So on a sample basis, you can always go check the employee. You will look at their appointment letter. You can always physically check them. Okay. Just to ensure that the bogus employees are not there. Okay. Which are also called as ghost employees. Okay. Maybe the company has shown the headcount as 400. But let's suppose actually the number of employees working in the company is 350. 50 employees are not working. Okay. Yeah. So how do you check that? Physically, you can check that. Physically, does it mean that you'll go meet everyone? No, on a sample basis, random selection you can do. Correct. Yeah. So let's look at some more audit procedures in relation to employee cost that you will have. Okay. Obtain a list of employees, and on that list of employees, you will do a analysis. Okay. Monthly movement split between new hires, employees who have left, continuing employees, all of them. For a sample which is selected randomly, obtain appointment letter, means check their underlying documents for the new joinees. Okay. Verify their salaries, which is about checking the cost. So how do you check the employee cost? Through the salary computations, or various other costs which are related to the employee. You will check the calculations. Okay. And some of those calculations you will check to the supporting documents. In this case, the supporting document will be the appointment letter, because therein you will get to know as to what is the amount that needs to be paid to the employee, and whether that is the same thing which is appearing in the detail, and eventually go into the books of accounts or not. Okay. For a sample selected randomly of resigned employees, their F&F, what is F&F? Full and final computation. Means when the employee will leave, so its full and final settlement is done. Okay, wherein its statement is prepared, what is the amount which is required to be paid to him, whether the amount is paid as per the uh, agreed terms or not, and for the right number of days, for the days for which the employee has worked, any sort of dues which were there, gratuity, etc., if that is payable. So all these will form part of those calculations. So again, here again, some sort of sample selection needs to be done in this case. Yeah. Yeah. Payroll reasonability, yeah, which is about the variance analysis. We discussed about it. Accruals provisions, whether those have been made in respect of gratuity, leave encashment, for which actuarial valuation will have to be done. Okay. ESI, PF calculations will check. So we can build the expectation. We can always look at the workings of the management and also ensure whether these liabilities are getting paid or not. But that is more from the liability perspective. Okay, we are more into the P&L side. Next, for the employee cost, what are going to be the disclosures? Employee benefit expense to be shown separately in terms of salaries and wages, contribution to PF and other funds. If there are any ESOPs components, staff welfare expenses. Yes or no? Yeah. All right. So now, moving further on to depreciation and amortization. Depreciation and amortization we have already discussed, but let's look at its audit procedures. See, in case of depreciation and amortization, first important requirement will be to obtain its calculation. Okay. In most of the cases, companies will have this calculation, okay, which can always be produced in Excel. Okay. In some of the cases, this may be automated, wherein the company has got ERP, wherein the depreciation is getting calculated, which can of course be extracted, or you can say you can always go check that on a sample basis. Okay, but the calculations are required to be recomputed, or you can say in terms of mathematical accuracy, auditor needs to verify that whether all the components have been captured in an appropriate manner, means whether the value of asset is correct or not, useful life is correct or not, residual value is correct or not, period for which day number of days to be calculated is correct or not. If there is any asset which has got sold, so its depreciation should be calculated only up to the date of sale. Yeah, so all of these things are required to be reviewed in the depreciation calculation. So now what do? Obtain an understanding, of course, so that you'll do. FAR you'll obtain, because FAR will have the list of all the assets. Yeah. And in respect of that FAR, on a sample basis, you can always go check some of the items. Same thing you will do for intangible assets also. Yeah. And the depreciation calculation. So whether that depreciation is calculated as per the requirements of accounting standards or not. What is the method which has been adopted by the company? For depreciation, analytical procedures can also be performed. For example, how the depreciation has sort of behaved, whether this has increased or decreased. If that has increased, what are the reasons for that? Decreased, what are the reasons for that? Okay. So this can always be checked, that maybe on the opening balance you can calculate depreciation. So it's all about building the expectation. Opening balance, you can calculate depreciation for full year. For additions, you can look at the trend. You can just sort of compute the depreciation for part period, again depending on as to when the additions were there, including the deletions. Yeah, so through this you can get the expected amount of depreciation, which can always be compared to the actual depreciation. So this can also be one sort of analytical procedure. And as around the disclosure requirements, so the accounting policy, okay, for depreciation, the useful lives, the method of depreciation, WDV, SLM, the residual values, all of these are important disclosure requirements. Okay, yeah, small area which is more about checking the calculations and analytical procedures. You will not have much of underlying documents in this case. You will not have invoices for depreciation. Yes or no? You will not have challans, etc. Yeah, but you will always have some approval documents or the management notes for the useful lives. Okay, if let's suppose you happen to be the first year auditor, you will always want to check as to how the useful lives have been selected. Okay, if there are any new categories which have got added, how the useful lives have been selected for the same. So some of these things can definitely come. Okay, so with this we are through with the depreciation. Any questions if you have before we move on to the next item, that is other expenses? Over to you. Over to you. Any questions? Any questions? No? I'm just hoping everyone is clear so far. Yeah, everyone clear so far? Any questions? Any doubts? No? All right, so now let's move further. Other expenses. Now, see, other expenses actually you can say is a large category. Yes or no? It's a large category. Now, in this case, various expenses could be there under this bucket: power and fuel, rent, repair to building, plant and machinery, insurance, traveling, legal professional, and various other expenses. Okay, now for some of them, we can discuss what are going to be the audit procedures. So let's talk about rent. For a rent, what will you have? An agreement? Yeah. So on a sample basis, the agreement will have to be looked at, whether the rent has been computed in line with the agreement or not. Okay, and a schedule needs to be obtained, month-wise expense schedule in respect of various agreements. Yeah, so you can say it's the overall register or the total ledger in respect of the rent expense, or the total workings for the rent expense can be obtained, from which on a sample basis amounts can be verified. And supporting document in this case will be the rent agreement. Correct? Further, verify if the expense has been recorded for all 12 months. So that's about completeness. Yes or no? So how will you ensure completeness? You'll check whether expense is booked for all the 12 months or not. Yeah. If at all there are any escalations, whether the rent is provided considering the requirements of escalation and in line with the accounting standards, whether that has been accounted for or not. Yeah. Now, for power and fuel, what do? Obtain a month-wise expense schedule. Verify again whether the expense is recorded for 12 months. Power and fuel, you can say electricity expense could be there. Month-wise summary you can compile for power units which are consumed. So that is about forming the analytical procedure. Generally, the companies must be preparing this sort of working. Okay. Next, insurance expense. Obtain a summary of insurance policies, but before that you can always obtain the ledger or maybe the schedule again for various types of insurance expenses which would be there. Yeah, for which you can check the expenses through the insurance policies. Yeah. Okay. Next, legal and professional expenses. Now, this is again considered to be an important area, important item. So now for legal professional, a scrutiny should be done as to why these expenses are incurred. Are there any litigations? Are there any legal cases? Okay, so that sort of assessment can always be performed. So that's why this expense is considered to be important. Okay, as regards its review, once again, if it's about the monthly retainership, so the schedule can be prepared wherein you can just check whether the expenditure has been captured for 12 months or not. Okay, for the remaining expenses which are not on a retainership basis, which are ad hoc, so some of the sample invoices of the professionals or the consultants who have raised the invoices, so those invoices can be verified, agreements can be looked at. Okay. Next, travel, repair, maintenance, printing, miscellaneous. See, some of these expenses you look at. Generally, what will you do? These are miscellaneous sort of categories. Okay. And in this case, of course, you can always perform the variance analysis as to whether they are increasing or decreasing, but there is no real pattern in respect of these types of expenses. So therefore, in these types of expenses, generally, you will end up doing a sample testing, okay, which is more about a test of control other than the test of, test of details, other than the test of control, which the auditor would have performed anyways. Okay, next, ensuring the disclosure requirements. Now, in terms of disclosure requirements, what will the auditor do? Where the expenses have been separately presented. So rent, insurance, power and fuel, all of these should be appropriately disclosed presented as a separate line item. Yeah, so this is something which you will do in respect of various expenses. Now what we can do is we can look at some examples. Okay, we'll just try to understand some of these things. Okay, now various ratios of current year and preceding year are disclosed in the financial statements of a company. Okay, so this is in fact one of the requirements. In the notes to accounts, various ratios of current and previous year are required to be disclosed. Discuss the requirement of law in this regard. Further, you are not required to list out the names of ratios. Okay, so in this case, what are you required to comment upon? You are required to comment upon that this schedule 3, okay, which requires various ratios to be given. Okay, what is that all about? Okay, yeah. So what does it require? So a company has to disclose various ratios in its financial statements in accordance with schedule 3. Further, company is also required to explain the terms included in numerator and denominator for computing these ratios. Okay, so one, ratios will be disclosed, then their calculation in a way. Yeah, so what is there in the numerator, denominator, that you will disclose. So you'll just not say net profit ratio is 25%. You'll say net profit is net profit divided by sales. So net profit number, sales number, and then you give the ratio. So this is how it's required to be disclosed. Further explanation shall be provided for any change in ratio by more than 25% as compared to preceding year. Okay, so the explanation is required to be provided by the management in this case. Clear on this? Everyone clear? Yeah, so let's look at this next question. Yeah, an auditor of a company is focusing upon its revenue. Okay, auditor of the company is focusing upon its revenue. In this regard, besides performing usual detailed checking of sales, he wants to perform substantive analytical procedures. You are required to discuss those substantive analytical procedures. Means how will those be performed? Over to you. I think this is something we have already discussed. Over to you. Tell me quickly. So what should be done? I think this is quite easy. Yes, quickly. Huh? So what should be done in this case by the auditor? Over to you. Prem says variance analysis, year-to-year comparison. Okay, what else? Can you please elaborate on this? Quickly, if you can elaborate on this. Anyone else? No? All right, so let's try to understand this. See, substantive analytical procedures will consist of sales trend analysis. So how do you check the trend? Month on month, you can check. Year on year, you can check. Product wise, you can check. Comparison with previous accounting period, which is the variance analysis. Category wise sales analysis, means product wise you can always check. Okay, any analysis the auditor may find relevant, and most important of all, building a sales expectation and comparing that with client sales records. Okay, auditor will need to know the sales prices. So how do you get down to the sales prices? Quantity rate. Okay, and then check the quantity, then check the rate. Yeah, so you are also substantiating that with the supporting document. Clear? Yeah. All right, so next. While verifying depreciation charged to the statement of profit and loss of a company, it is noticed by the auditor that one new machinery was purchased and installed in the month of April. Okay. Necessary trials were carried out and machinery was ready for use in April itself. However, owing to the lack of orders in the market, said machinery was put into actual operation from 1st October. Company has accordingly provided depreciation in its books on this machinery with effect from 1st October. Is above recording of depreciation by the company proper or not? Over to you. I think this is more of an accounting answer. Quickly, everyone. Tell me quickly. Quickly, over to you. Sunil says not proper. So can you tell me what is not proper, Sunil? So what should have been done? What is not proper in this case? So when you say this is not proper, so what is missing? What is wrong? Over to you quickly. Almas says it must record depreciation from April. Okay. What about others? Prem says depreciation should be charged from the date of acquisition or the date when the asset is ready for use. Correct? Yeah. So in this case, when the asset is at its location, condition necessary for it to be capable of operating in the manner intended to be used by the management, that is when the depreciation is required. Okay, which means the moment asset is ready for use and not from actual usage. Now please understand, Can you see in some of the places you can just look at these questions? They can become so easy for you. Why? Because there's more of simple accounting which the auditor needs to check. Yeah. So therefore, if the company records this from 1st October, obviously this is not proper. Correct? All right. So now what we will do is we'll just look at this case scenario. Okay. And this is this case scenario. We'll look at some questions. Okay. Over to you. Please read this carefully, because on the basis of this, the questions that are going to come, okay, you need to answer that. Fine. Okay. Now, Sanchil Limited is a company engaged in the manufacture of variety of stainless steel household items, ranging from hot pot, pressure cooker, cutlery set, bottles to serving trays. Company has its corporate office in Delhi and its plant in Raigad, a city in the state of Chhattisgarh. Okay. So therefore, company has got two locations. One is corporate office at Delhi and plant at Raigad. Company is planning to expand its manufacturing activities, yeah, by setting up two new plants in the Raipur district of the state. Okay. So company plans to expand the manufacturing activities in Raipur. For this purpose, company also raised the funds by making a follow-on public offer during the financial year 22-23. RK Maheshwari and Associates are the statutory auditors of the company since 2020-21. Engagement team consisted of 5 members, with CA Raman as the engagement partner, CA Madhu as the senior associate, and 3 article trainees, namely Aman, Chaitanya, and Devesh. Company raised fresh capital of rupees 5 crore during the financial year 22-23. The shares with the nominal value of rupees 10 per share were issued at a premium of rupees 5. Means the shares were issued at a premium. Company has reserves and surplus totaling to rupees 2 crore, comprising of security premium and journalism. Okay. CA Raman directed CA Madhu. Now, who is CA Madhu? Senior associate. And CA Raman is the engagement partner. Okay. So now, engagement partner has given a direction to the senior associate to verify the issue of share capital in detail, giving special consideration to utilization of security premium account. Yeah, because security premium is a restricted reserve. It cannot be utilized for any purpose. So there is a specified purpose. Only for that purpose can be used. So therefore, it's important to check whether that is getting used for the usages which are prescribed or not. Otherwise, that will be a concern. Okay. Next, audit engagement team discussed with the management about the performance of the company during the year under consideration. To this, the management told the engagement team that the company is performing very well and the company has doubled its revenue during the year as compared to last year. Okay. So the engagement team discussed with the management about the performance. Okay. And performance seems to be going good. Yeah. The revenues have doubled. So it seems to be going good. Management of the company also told the auditors that during the year, company has made majority of its sales on credit basis. Okay. Yeah. So if the sales are taking place on credit, so what will happen? trade receivables will be there. Yeah. And if more of sales are taking place on credit, so trade receivables will increase if those are not collected. Correct? Then, moving further, CA Raman directed Mr. Aman. Now, who is Mr. Aman? So, if you go back, there were three article trainees: Aman, Chaitanya, and Devesh. Okay. Now, CA Raman directed Mr. Aman. So, it appears that various areas are getting allocated to the team members. Okay. So Aman is asked to send the balance confirmation request to debtors having balance in excess of 1 lakh. So some sort of criteria is established that only the debtors whose balance is above 1 lakh to those debtors balance confirmation requests will be rolled out. Now during the course of audit, CA Raman, Chaitanya and Dipesh. Chaitanya and Dipesh are also the article trainees. Okay. Now they visited power plants in Raigad to get a detailed understanding of manufacturing process. Team performed analytical procedures to obtain audit evidence with respect to overall reasonableness of purchase quantity and price of inventory. Okay. More specifically, Chaitanya collected the reports from the management for composition of stock, that is raw materials as a percentage of total stock, compared the same with the data of previous year. CA Raman and Chaitanya thereafter discussed the reasons for the variations with the management. Okay. Also, while considering the presentation and disclosure requirements as per Schedule 3, CA Madhu, that means the senior associate, discussed with Raman the disclosure with respect to following account balances: current maturities to long-term borrowings, long-term maturities of finance lease obligations, interest accrued but not due on borrowings, interest accrued and due on borrowings. Okay. So for all of these items, their disclosure requirements were discussed. Okay. Now, considering the case scenario, now this is how you should be getting ready. Huh? You need to answer these questions. Which of the following is not correct with respect to shares issued at premium and security premium as per the requirements of Companies Act? First, where a company issues shares at a premium, whether for cash or otherwise, a sum equivalent to aggregate amount of premium received on those shares shall be transferred to security premium received. Security premium can be applied by the company in paying up unissued equity shares to be issued to members of the company as fully paid up bonus shares. Security premium cannot be applied by the company in writing off expenses of or commission paid or discount allowed on any issue of equity shares of the company. Security premium can be applied by the company for purchase of its own shares or securities. So tell me. Now see, it's more of an answer wherein you need to understand the legal requirement which is attached to security premium. And we talked about it. Remember? So can you tell me what will be the right option? Over to you. Over to you, quickly. Which option you think is correct? Shreya says A. What about others? Prem says C. Okay, what about others? Almas says C. Yes, what about others? Quickly. Sunil says C is not correct. Okay, what about others? All right, so now if you look at the option, yeah, So it's something which is also given in your material. It's C. Yeah. All right. So now let's move on to the next question. Which of the following is not an example of capital reserve? I think it's fairly easy for you to answer. Over to you. Out of these four reserves, revaluation reserve, security premium, capital redemption reserve, general reserve, which of the reserve is not a capital reserve? Or you can say which one is free? Over to you, quickly. Quickly. Great. Prem says it has to be general reserve. Almaz also says it's D. Priyanshi, Shreya, Sunil. Yeah, very good. Okay, next. There are two statements. Yeah, basis which four options are given. Confirmations as well as undelivered letters should be given, returned to the auditor and not to the client. Statement 2. When no reply is received, auditor should perform alternate procedures regarding the balances. Okay. So can we say statement 1 is correct, 2 is wrong? Can we say 2 is correct, 1 is wrong? Can we say both the statements are correct? Or should we say both the statements are incorrect? I think once again, it's very, very simple. Prem says both are correct. What about this? Quickly. Almaz says both are correct. Same is the response from Sunil. What about others? Almaz, Prem, Sunil, Shreya says both are correct. Priyanshi is also saying C. Okay, both are correct. Yeah, very good. So in this case, okay, just to understand now, see if the reply is not received, then obviously alternate procedures will have to be performed. So statement 2, I think is quite simple. Let's look at statement 1. Confirmations, forget about undelivered letters, should be given to the auditor, not to the client. Obviously, because confirmations means the direct confirmations. They have to go to the auditor, not to the client. What do you mean by undelivered letters? See, at times it may happen that a confirmation letter is sent to a party, say a customer, a vendor. Okay. But let's suppose for some reason that letter is not delivered. Maybe the address got changed. Yes or no? In this case, because this entire process is independent. Independent means auditor is doing this, auditor is sending the letter, and auditor has to receive this back. So when this gets returned, this has to come back to the auditor only. Yes or no? Now, in this case, if there are some undelivered letters, so these letters belong to whom? Auditor only. So therefore, the undelivered letter should also come back to the auditor. Why? Because only then the auditor will get to know that out of the sample he would have selected, let's suppose 20 parties he has selected. So now, if let's suppose for 3 it's undelivered. So now the auditor will know that for 3 he needs to send it again, or for 3 he needs to find out as to whether the address has got changed, there is some other problem. Okay, because of which this has not gone delivered, because he needs to ensure the confirmation for these 3 parties. And how will he be able to ensure that? Only when he will roll out the confirmation letter again. Otherwise, that will not be possible. Yes or no? So that's why it becomes important. Clear? Yeah. Okay, now question number 4. Chaitanya performed which of the following analytical procedures to obtain audit evidence with respect to overall reasonableness of purchase quantity and the price of raw material? So in fact, it's more of a generic question. Means if you were to perform analytical procedure, why? Because you want to get onto the overall reasonableness of purchase quantity, price of raw material. Okay, so what would that audit procedure be called as? One, you can say it's the consumption analysis. Second, you can say it's the stock composition analysis. Third, reasonableness test. Fourth, ratio analysis. Over to you. Which one do you think will be the correct option out of these four? Over to you quickly. Which one is the correct option? Which option is correct? Tell me quickly. Out of these two options, which option is correct? Sunil says stock composition analysis. Prem says ratio analysis. See, let's understand. Ratio analysis is not correct. Why? Because that is about computing the ratios. Reasonableness again doesn't fit. When it comes to consumption analysis, so in case of consumption, you are only talking about the consumption. But over here, you are talking about reasonableness of quantity as well as price. Means you need to check the stock composition. Okay, so that's why what should be the correct answer? B. Okay. Last, which of the following is not correct with respect to disclosure requirements of Schedule 3? Okay, so basically here again you need to just check whether these are the requirements of Schedule 3 or not. Current maturities of long-term borrowing is to be disclosed under the head long-term borrowing. Long-term maturities of finance lease obligations is to be disclosed under long-term borrowing. Interest accrued but not due on borrowings is to be disclosed under other current liabilities. Interest accrued and due on borrowings is to be disclosed under other current liabilities. Over to you. I think here again, the answer is very simple. If you can just read the options carefully, you will be able to get on to the answer quickly. Tell me quickly. Great. Shreya says A. I think that's correct. Very good. See, please understand. Current maturities of long-term borrowing. Current means it becomes short-term. Yes or no? Yeah. So can it therefore go under long-term? No. Yes or no? Yeah. Simple. Easy. Yeah. All right. So with this, we can just conclude our discussion on this chapter. And for today, what we can do is any questions, any doubts that you may have, we can discuss that. And I believe it's a lengthy chapter, so I would request, even though we have completed, but just make sure that you keep revising this. Okay, very, very important. No questions? All right, so then I think we can just conclude this discussion. Thanks everyone for your time and for this wonderful participation.
Thank you, HL sir, and thank you students for your participation. So today we have completed our chapter number 5, Audit of Items of Financial Statements, which carry weightage of up to 20%. It's 12% to 20%. So do revise this chapter, and with the completion of this chapter, your first module of auditing and ethics is completed. Your next class is scheduled on 21st of April, that is Monday, in which we will cover chapter number 6, audit documentation. So majority of the students ask that how to revise chapter number 5. If you can see my screen, Achal sir, is my screen visible?
Yes, that's visible.
Okay. So as you can see the screen, majority of the students ask that how to revise chapter number 5 because it's a large chapter. It's a very lengthy chapter. So as you can see, this is Saransh of auditing and ethics, and this is chapter number 5. So everything is given in a very short form. As you can, I will show you the audit procedure of any one assertion. Yes, see, audit of share capital. Like all of the audit procedures are given in a chart form and in a very short form. But again, this is for revision purpose. For detailed study, you have to refer to the study material. But this is for the purpose like you get only 1 day for the revision for exams. During exams, you get only 1 day. So it's not possible to cover whole module. Sometimes it's not possible to cover whole module in just 1 day. So for that purpose, Saransh is being launched for your revision, for your last minute revision. Okay, as I will show you some other procedures also, some other assertion like this is of reserves and surplus. Okay, each and every assertion is being given in the saransh, like you can see of borrowings, audit procedure for existence, all of the procedures are given. Okay, so you can revise it from here. And for the revision of question, you can again refer model test papers, MTPs, RTPs. Okay. So before coming to the next class, revise chapter number 5 because next class is on Monday. So you have ample of time. You can even revise other chapter also, chapter number 1 to 4. And if you have any doubt, you can ask in the chat.
I think there's one
Yes.
query from Samohini. She is asking how many previous attempts papers one need to revise.
For again, what's the name, sir?
I believe there is no standard answer to this. Yeah,
Yes.
this is more of, I think, student driven, person to person. It's up to you as to how much practice you want to do. But of course, you should just try to do at least 3 to 4 as a
At least
bare
three.
minimum. That's how you see it's all about practicing. Huh? But of course, you should not go back to 10 years or maybe 10 attempts. That much is not required.
For the
And
new course, since the new course is introduced, so you can revise all of the papers of new course. Again, as sir said, it depends upon you. You should refer at least 3 to 4, but should not go to 10 years back because the syllabus was very different. Yes, Priyanshi, for this chapter, Saransh is very useful. You're right, because it's a lengthy chapter. Anyone else, if you're having any query, you can write in the chat. Okay, so no doubts. Very good. So, okay, students, see you on Monday. Revise all the chapters, and thank you, Achal sir, for this wonderful session.
okay, thanks. Sir.